Welcome everyone to the USC Economics Symposium. My name is Alex and I'm co-president at the Economics Association along with my co-president Uma. But before we start, I'd like to address the recent events in our country and the tragedies certain groups of people in our nation have endured. We keep those affected by the malignant actions of the ignorant in our thoughts tonight and moving forward as we push for change. Moving on to the event, the EA is the official economics organization run by students for students. We are excited to partner with the USC Center for Political Future to bring you the first event in a series of conversations about the Biden-Harris administration. Our goal for this series is to foster focused and intelligent discussion on campus covering current events in the political and economic sphere. I would like to thank Rohit Bola, Carol Hu, Blake Stamato, and Jake Stemmons for their work in the EA Executive Board this past year. I would also like to thank Alice Holzman and Karina Chikas, along with the Center for the Political Future, for lending a big helping hand with the event tonight. Now I'm going to let Uma go over the ground rules and introductions for the event tonight.
Thank you, Alex, and thank you all for coming tonight. Audience members, please use the Q&A function at the bottom of your screen to ask questions throughout the event. The moderator and panelists will address as many questions as they can get to and weave them into the discussion. And now, without further ado, I would like to introduce our moderator, Professor Mark Moore, who is the Director of Undergraduate Studies for the Economics Department. He teaches courses in macroeconomics, international economics, mathematical methods, and public policy. Professor Moore earned his PhD in economics from MIT. Welcome, Professor Moore.
Thank you, Uma, and thank you, Alex, and the other members of the EA board for putting this event together, and also a big thank you to the Center for the Political Future at USC for helping us put this event together. It is my pleasure to introduce our panelists today. First, we have Professor Robert Shrum, Director of the Center for the Political Future and the Carmen H. and Lewis Warschaw Chair in Practical Politics at USC Dornsife. Bob Shrum has a long and distinguished career in democratic politics, and he's well known to the USC community from the many public events at the Center for the Political Future. We have also Professor Romain, who is a professor of economics and the chair of the Department of Economics at USC. Professor Ranciere also had a career at the International Monetary Fund before joining us here. He works in international economics, macroeconomics, financial economics, as well as other areas. And last but certainly not least, Paulina Oliva, who is an associate professor of economics at USC and also the vice chair of the Department of Economics. And she works and teaches in environmental policy and environmental economics and development economics. And I'm sure she'll have many interesting things to say on these subjects today. So our time is limited, so let me jump right in. I would like to start with Bob Shrum. Bob, today marks the 63rd day of the Biden administration. We've had a very large relief act passed, albeit with some amendment and with no minimum wage. There is a large infrastructure bill evidently in the works. 2 immigration bills have passed the House of Representatives that represent part of the Biden administration plan. And we hear now that there are discussions about the minimum wage and a possibility of maybe some compromise on the minimum wage between moderate Democrats and Senate Majority Leader Chuck Schumer. How's the Biden administration doing? And are there prospects for any progress on any of this legislation?
If you had told most people 3 months ago, 5 months ago, that Maureen Dowd would be writing a column in the New York Times comparing Joe Biden to FDR and LBJ and unfavorably comparing Barack Obama to Joe Biden because Biden's sweep of his ambition was so much greater and what he achieved initially appears to be so much greater, you would have thought I was crazy. Biden, people assumed, and he himself said this, was a transitional figure, when in fact he may turn out to be transformational, although I think it will be more difficult than people assume. He has passed the biggest piece of economic and social legislation in decades. It's not just $1,400 checks. It's a revolution in terms of how we support children in this country with the child tax credit. It's massive support for state and local governments, massive investment in containing and crushing COVID, massive investment in a whole series of things that have been denounced by the Senate Republican leader as a liberal wish list. And they are a liberal wish list, but they will have a profound effect, I think, on the economy. I'll let the economists here speak to that. I noticed that Goldman Sachs raised its estimate for growth in the US this year, GDP growth, to I think somewhere around 7%, which is extraordinary. We haven't achieved anything like that since 1984. I would say the political impact could be considerable. Only 3 times in a century, in 1934, at the height of the New Deal, in 1962, right after the Cuban Missile Crisis, and in 2002, the year after 9/11, has a new president seen his party not get shellacked in the midterm elections. And I think Biden has a chance to make that happen. Footnote, and I'll get to it in a minute, depending on what happens with this whole array of voter suppression attempts. If he could do that, and if he could hold the Senate, and if he could hold the House, maybe even increase his margin in the Senate, that would mean that his presidency would be very different from Barack Obama's, which basically ended in many ways in terms of really being able to move the country forward for the second 2 years of his first term. Once he was reelected, he had some more power, and he was able, for example, to modify the Bush tax cuts. What's going to happen beyond this? Well, infrastructure is a possibility, a very real possibility, because it can be done through the reconciliation process, which requires only 50 votes. Some of the more conservative or moderate Democrats, depending on how you want to name them, actually are for infrastructure. People like Joe Manchin, whose state would benefit immensely from infrastructure. And one of the reasons it could be done through reconciliation this year is because there's room under the arcane Senate parliamentary rules for 2 reconciliation bills this year. Normally that would not be the case, but they didn't pass one last year. So there's room for a second one this year. On the minimum wage, which you mentioned, Bernie Sanders is saying it has to be 15, it has to be 15, it has to be 15. The votes aren't there. But I think the votes are there, maybe not just for 11, maybe for 12. 11 is where Manchin and Sinema are, maybe for 12. And both of them are in favor of a cost of living escalator, which if you started at 12 would probably get you over 15, or there's a reasonable chance it would get you over 15 within 3 to 4 or 5 years. Other pieces of legislation that the president wants will be very difficult. Guns have been, look, 90% of the country is in favor of background checks and has been for years. And here the power of money and the power of ideology speaks far more than the power of voters. 1994 was a near miracle when they got the assault weapons ban and the Brady bill. It was sunsetted after 10 years. Bush had promised in the 2000 campaign that he was going to propose renewing it. He did precisely the opposite. So those prohibitions died. So the fight over guns, I wish I could see a way forward. I think it is nutty that it is, as Raphael Warnock said yesterday, easier to buy a gun in this country, an AK-47, than it is to vote. I think that's obscene, and I wish we could change that. I hope that somehow we can find a way to do it. That really depends on what I talked about earlier, which is Biden's success, not only in terms of containing COVID and having a huge impact on the economy, but then cashing in politically on that. I think the same thing is true of immigration. Now, voting is a different issue. There may be a way to create an exception to the filibuster for voting rights issues, and the votes aren't there to create a general exception at this point. If there were 54 Democratic senators, I think you would have seen this filibuster gone by now. But voting, some Republicans seem very obvious about the reasons they're opposed to voting. One of them in Arizona said, look, the quality of voters matters as much as the quantity of voters. What does that mean? I think that's barely disguised racism. Cindy Hyde-Smith, the senator from Mississippi, said today that we can't have souls to the polls, Black people going to vote on Sundays, because the Bible says, keep holy the Sabbath. Well, it's actually in the Old Testament. So I think she means that they shouldn't be able to vote on Saturday, but she may not be able to understand that, or may not understand that. I think these are all barely disguised attempts to prevent voting. Now, Joe Manchin actually has some interest in these voter suppression efforts not working. He'd like to continue to be chairman of a Senate committee, not a ranking member. And Kristen Sinema has seen her popularity in Arizona plummet while Mark Kelly's has stayed high. So she may feel some pressure to act too. The way it will not happen simply by the Twitterverse going crazy and pronouncing anathemas on Manchin and Sinema. That I think only makes the situation more difficult. The Twitterverse didn't determine the Democratic nomination for president, and it will not determine whether or not we make progress with the filibuster. But I think in some ways, in terms of both the economic and social future of the country, the second most important thing Biden could get done right now would be to shore up voting rights in this country so that we don't enter a new era where we are living under a regime that is little better than Jim Crow. Anyway, I've talked long enough, so I'll stop for the moment.
A lot of stuff to digest there. I'm going to pick up one thread of that, one large thread though, with Romain, to talk about the macroeconomic situation, given that we've had one large bill and what happens if we get an infrastructure bill. A very small select part of the Twitterverse had a debate about the size of the bill and whether it would kick up any inflation beyond something that was temporary, and whether Jerome Powell and the Fed would have to act a little sooner than they might have thought. It's a very select part of the Twitterverse because they're basically economists all trained in the same way. So it's a very interesting debate. So I was wondering, Romain, what do you think is the macroeconomic forecast for the rest of the year going into next year? As Bob Shrum mentioned, growth forecasts have been increasing. Some surveys of economists suggest they think Jerome Powell will have to raise interest rates earlier than he has said. What do you think?
Yeah, so I think first we have to start by reminding that the COVID crisis, it's very different from the financial crisis of 708. The financial crisis of 708 put down the financial systems, put a lot of Americans under the waters in terms of their mortgage. And so, in fact, despite some stimulus at the time, we were not able to actually catch up with the pre-crisis trend levels. But I think it's an interesting backdrop because many people advocating for the size of the relief plans had in mind that we might not have done enough after the financial crisis of 708, and we might not have done enough on the fiscal stimulus. But again, that's a little bit of a different context. So I think what we need to understand is where we start and how far can we go. Okay, so where we start is in January 2020, the economy was doing very well. The unemployment was, I think, around 3%. And so basically we were at what economists call the output gap, the difference between the potential output given production factors and labors and the actual output were rather similar. Okay, so I think the objective of the plan is to bring back the economy to this kind of the maximum potential employment, and so closing the output gap. For that, we need to have an estimate on the output gap, and then we need to see how the relief plan translate into spending that will then actually close the output gap. That's what the economists call the fiscal multipliers. When you spend $1 in terms of fiscal stimulus, how does it actually boost demands, and how does that help closing the output gap? And I think there have been a debate. Larry Summers initially said that the plan was excessive in size and that will actually create some inflationary pressure. And then Krugman on the other side said, no, we don't have to worry it. And the reason for which we don't have to worry it is because he believed that the relationship between unemployment and inflation is such that lowering unemployment will have only marginal effect on inflation. And a lot of actually, so I think there are two parts to the debates. One part is that are we risking overheating the economy with this plan? And the other part will be what will be the consequence in terms of inflation and then the potential effect of that. So if we start from the basic things of the output gap, so I think I will rely on a piece that Olivier Blanchard, my former boss at the IMF, put on the Peterson Institute for Economics on February 18, and he did some very simple calculations. So basically, the output gap now is something close to 900 billion. There are also some issue, which is that it's possible that it's a bit lower because the COVID crisis has actually damaged the potential to produce, and the potential output might be now a little bit lower. But we can forget about that for now, and we can have this 900 millions as a basic of the output gap we are trying to close. So then the second part is by how much, if you spend 1.9 trillion, by how much this will actually increase spending. And that's a fiscal multipliers. And the fiscal multipliers specifically depends a lot in terms of what people will do with the check they receive. Will they save part of it? Will they consume part of it? It also depends a lot of who you are talking to. The higher you are in the income distribution, the lower is your propensity to consume, and the higher is your propensity to save. So I think there is, we can make some simple calculations, and assuming that the propensity to consume out of $1 you receive in the check will be 50 cents, then they will actually generate a fiscal multiplier of 1. So it's kind of simple. So you have 900 million in the output gap. So you will actually, with the 1.9 trillion relief plan, you will actually spend more than the output gap. So I think in terms of will this create some overeating in the economy, there is a case to believe so. So after that, how should we think in terms of the consequence? That's where it became a little bit more debated and murky. So if we look at what is the current relationship between unemployment and inflation, people are not worried. They say this will bring the inflation close to between 2 and 2.5%. If you think about the Fed has been looking for a long time to bring back inflation to its target of 2%, even suggests that we should go above target if we want to be on target on average. So if you think in terms of the current state of the unemployment inflation relationship, we should not be too worried. Where Blanchard says starting to be worried is when you look at what happened in the 60s. And I think that goes back to what Robert Shrum said earlier about the 60s and Kennedy and Johnson. So in the 60s, actually, they were a kind of a large fiscal stimulus of the US economy with all the new plans, especially the plans against poverty and the extension of the welfare state. And in 1969, so if you start in 1961, unemployment was at 6.5%, inflation was at 1%. Initially, things seems to be okay. In 1965, unemployment is at 4.5, so it's relatively low, but inflation is still at 1.5%. And suddenly things started to accelerate. And in 1969, inflation unemployment, now we have 3.5%. It seems that we are hitting the wall. We cannot reduce unemployment further. So then any further stimulus will go into inflation, and inflation goes to 5.5%. So economists don't claim that will be the scenario, but it's a potential scenario. So if you look at the downside risk, that's one of the downside risk. And then if you are here, there are two potential consequences. So one potential consequence is that the Fed will have to shift gear and starting to increase interest rate. This is a normal course of actions. Per se is not worrisome, but what is worrisome is that it will have a large impact on everyone who is kind of depending on debt, especially corporate debt. So a lot of companies are very leveraged. This might have some consequences. Less on the financial sector because banks are now well capitalized. So that's, I think, still manageable risk. I think the bigger risk is that at some point, inflation stop being anchored in terms of expectation, and then we enter into what Warschaw coined himself to be a wage price spiral, and then you move into the stagflation of the 70s. So I think that's a risk. So I don't think the risk is so dramatic now, but I think it's worth looking into that. The other part, I think, in which I think Warschaw is a little bit too pessimistic is since the last plan post 708, what we also see is that stimulus plan do not only boost aggregate demand, it can also boost aggregate supply. It can also have an effect of investment, and then you can actually boost potential output. And if you think about all the investment into healthcare, for instance, I think that's opened a new arrays of possibilities of more cure for lower cost. So I think a lot of things actually, if you think in terms of reinvestment into schools, that will also have an impact on labor and human capital. So I think this effect might be a little bit take more time to materialize, but it's reasonable to believe that this stimulus will also have an effect of potential output, and then that's actually connect with the second plan, the 3 trillion plan, which is in nature very different, because in this case the big difference is that the relief plan is basically financed by issuing debt. Okay, the second plan will be financed by raising taxes. So it's something of a different nature. We can talk about that. If there are some
very quickly. So do you
Sure.
think the second plan, if it comes, should be mostly financed? So in terms of the field, how much fiscal space is there?
My view is that I think we are now with this plan, we are probably spending close to 14% of GDP. So we're going to actually add to the public debt, if it's not financed, which is not planned to be, 14% of public debt. Now the interest rates are very low, so it's not really painful. But if the interest goes up, that starts being painful. That will have some impact also on the US-Euro exchange rate. In my view, the second plan will be only achievable if there is a tax increase in order to fund them, and then the tax increase will have its own impact. So I will separate both things because otherwise people get a little bit confused. And my focus now was on whether or not there is a risk of overheating the economy. And the answer is there is a risk, but the risk seems to be relatively modest so far.
Great, thank you. Paulina, that's a lot of stuff that's been put on the table here, at least 15 issues. So I want to invite you to talk about a couple of priorities that you might think are important from a policy point of view, either environmental or otherwise, or of course, comment on anything you've heard. Nobody should feel like they have to stay in their lane here. So.
Yeah, no, thanks, Mark. Yeah, I actually going to stay in my lane because that sort of feel comfortable. And I'm happy to talk a little bit, follow up on a few of these issues of the budget reconciliation process and how that plays a role in terms of environmental policy. So yeah, I mean, I think I'd like to just lay out sort of the potential for substantial environmental policy during the Biden administration and what that's looking like. And I see three routes for instituting this environmental policy. One is through sort of the existing regulatory environment, so similar to the Clean Power Plant program that Obama did under his administration, which was his big signature environmental program. He did that without changing legislation under the Cleaner Act, and that was successful, more successful than the attempt to do cap and trade. So that's now also possible. However, we do have a Supreme Court that's a little bit more conservative and could have an issue with that. So the way I look at it, I think it might be even harder than it was during the Obama administration to use the existing regulation, the existing Cleaner Act, to institute such a big program. So that I see as unlikely. The second route for environmental policy would be through this budget reconciliation process, as Robert Shrum mentioned. So these are expenditure bills, right? So it would be environmental policy that was strictly constrained to have a form of expenditures. And we know that many of the economic instruments that we economists favor to achieve environmental goals are not necessarily expenditures, so have the form of cap and trade or carbon taxes. So it's a limited set of tools that we have at our disposition through just going through spending. And the things in this bill that just kind of got put out as a proposal, there's already quite a few items there that try to be aimed at environmental policy. For example, there's the cash for clunkers type of idea. There's the weathering of homes and building weatherized homes going forward. There's infrastructure spending on rail and on electric vehicle charging stations. And the truth of the matter is that I can mention like at least one paper in economics that has described or has shown how each of these items of policy are just not a very good idea. They're just not very effective as environmental policy tools. So for example, the weatherization program, it's been shown that it's really actually hard to retrofit houses to become weatherized, and because people are not willing to do it, even if you subsidize really highly, right? And you help families do it. It's really hard for them to adopt this strategy. And when you do it, the actual energy savings fall much below the engineering estimates, because there's behavioral responses to having, cheaper air conditioning service and so on and so forth. So they're not very effective tools to bring down carbon emissions. But that's what is going to be more likely to happen for the moment being, because it can be done just through spending, and that's what we can do right now. There's still a little bit of a challenge because you still need a majority to pass this. So it could still be the case that the conservatives, the moderate Democrats could oppose them. So it's not a done deal, but I think that's kind of the more likely scenario. And then you do have Janet Yellen as the Secretary of Treasury, and Janet pushed for the carbon tax when before coming to Treasury. She kind of got together a bunch of Nobel Prizes in economics to sign off on the desirability of a carbon tax as the signature policy to combat climate change. And there's some things going in favor of that. So the American Petroleum Institute issued a statement supporting the carbon tax. In 2010, Exxon came for a carbon tax when the Waxman-Markey bill was kind of on the plate. So there's some support from the private sector to this regulation, because it's kind of a clean-cut regulation that makes private firms know what to expect, and I think they are preferring that versus an alternative of uncertainty and an array of policies that they really don't know what they're going to look like. And I think that again, because Janet Yellen is a Treasury Department, and because there's some support, there's some possibility of that. But again, we would have to pass legislation in order to make that happen. And that's going to be really tough. So those are, I think, the avenues for serious environmental policy. I think overall, I would say that I'm not incredibly optimistic of with this set of tools at Biden's disposition to meet some of the goals that have been set forward. I think that in terms of meeting the commitments under the Paris Agreement, we are en route to meet those just because of COVID, because we had like a big fall in carbon emissions, a 9% reduction in carbon emissions due to COVID, but those, especially if the economy recovers, those are going to come back. So that's, you know, I don't think that we can really count on them for the long run. But the longer term commitment of achieving like a 28% reduction with respect to the 2005 levels by 2025, I think, yeah, that was kind of the more stringent goal. I think that's going to be a little bit harder. And then, you know, we have the Green New Deal, right, which has more ambitious goals of bringing down emissions to 0 by 2050. And I think we're definitely not on route to do that with the set of tools that Biden has at its disposition right now.
Thank you for that. I want to fold together a few themes here. We had a question from a student about the nature of work in the post-COVID world with remote work, but I want to fold that into a bigger issue about economic inequality. We're all aware of the dramatic amount of economic inequality broadly defined that we have in this country, but COVID made it very stark. Literally, some people could stay at home and work, and other people either could not work because of the health problem or had to work under very dangerous circumstances. So I guess a question for you, Bob, is to think about the array of policies we might think of to address this: tax policy, education policy, everything else. What is it that Democrats can do in this area, both to improve the policy and to get credit for it in the electoral sphere?
Well, first of all, I would say they already did think about this.
Yeah.
That's what the $1.9 trillion is all about. It's not just about stimulating the economy, it's about dealing with some of these inequality problems. And the estimates are that the bill will cut child poverty, for example, in half and have a substantial effect in terms of reducing poverty more generally. And I have to say, when I listen to the discussion I've just heard, I'm constrained to say that if Joe Biden looks at the example of the 1960s and he said, well, it went along pretty well until 1969, my guess is he'd take that bargain. I mean, he's thinking about 2022, and I don't know whether he's thinking about 2024. So I think we've already done a fair amount. Secondly, I think that more can and will be done. I think something will happen on the minimum wage. And reconciliation can be used not just for spending, but for tax changes. In fact, the Bush tax cut passed through reconciliation. The Trump tax cut passed through reconciliation. And while I don't think you can get the votes for a carbon tax, Paulina, I'm sorry, in reconciliation, I think you can get the votes for other kinds of things, like putting the corporate tax rate, for example, back up to 28%. You don't have to take it to 35, but put it back up to 28% and use that money to begin to deal with inequality. The other thing is, if you have a big infrastructure program, that will have an enormous impact on inequality, because it will create a lot of jobs in, not at the top end of the scale, but further down the scale. And those jobs will pay decent wages. Biden talks about this all the time. And it will also, by the way, have an impact on the environment. I think the best hope, Paulina, for environmental legislation is going to come through the infrastructure reconciliation bill. And it may not be perfect. And there may be things that would be, in an ideal world, better. But I think this is the limit of what he can get. So I think he's done a lot on inequality. I think he'll do a lot more. I think in terms of the downside risks, he's not irresponsible. Larry Summers, by the way, who's my friend, has been my friend for 40 to 50 years. He's a lot better at economics than he is at politics. If I were him, I would not have written that op-ed piece. I would have gone and tried to talk to my friends in the administration before putting all those words in the Washington Post. So I think Biden will proceed as the kind of pragmatic politician he is and learned to be over all those years in the Senate. But at the same time, he has big goals. He wants to be remembered as someone who did something significant. And if the something significant is a little messy, it falls a little short, it runs some risk of inflation, although I know from talking to people in the administration, they do not believe that at this point they're running a risk of inflation. But if it runs some small risk of inflation, they'll take that. As long as they can get this economy moving, as long as they can get COVID under control, and as long as they can avoid the fate of most recent presidents, which is after your first 2 years, you can't do much of anything because you get shellacked, as I said earlier, in the midterm elections.
Romain, earlier at the beginning of the pandemic, I believe, I think you sent a tweet, something to the effect of, this will force us to recognize the value of essential workers. Do you have thoughts about the nature of work going forward? Is there going to be much of a shift toward remote work? Is this going to have effects on income distribution or economic activity generally? That's about as broad a question as you could ask in this area. So if you'd like to tack on to any of that.
You call on me, Mark?
Yeah.
Mm-hmm. Okay. So I think one issue, yeah, so I think the issue of inequality, there will be different way to approach it. Of course, education is one. Reversing all the tax cuts that have happened, basically since the Reagan years, is another one for sure. But then you have probably to go beyond and to start to think in terms of wealth inequality, especially because automation also will have a big impact of who is actually on the return to capital versus the return to labor. So in this case, I think one issue that will have to be put on the table is whether we should have also more significant wealth tax. In my country, France, we had the wealth tax, tax on your net worth. It has been repealed by the current president, but I think it's probably one of the future avenues, and this will tackle not only the issue of income inequality, but it's the one of wealth inequality, and especially in the context of automations. And I think that will be very important. Basically, we are going back to the issue of taxing capital. Yeah.
Paulina, do you want to weigh in here? I mean, there's also an environmental dimension to remote work, of course.
Yeah, so I given a little bit of thought to this. I think that first from the inequality perspective and the effect of that in the economy, I'll say something about the local economy. There's a recent paper by a student of mine, a student Rars at USC Economics, that looked a little bit into what's going to happen to real estate in the local area in LA in response to an increase in remote work. And what she finds is that the real estate value of both commercial and residential area downtown, so where the jobs are, is going to go down as people are going to move more towards the suburbs, because now the constant commute is not that big of a big part of their life. So the way I think about this is that in net, I think that if there is a share of the labor force that now is more actively working from home, it is a little bit of like an endowment, right? A gift to the economy, that we have this extra real estate space. If downtown prices go down, both residential and commercial, and that's going to have an impact in inequality, because it's usually the case that low-income workers or lower educated workers have less of a chance to commute, right? So if they can now afford to live closer to their jobs, that's going to be an income reallocation to them. So that's going to help somewhat with inequality, just thinking it at the very local level. But I think that's likely to happen in other metropolitan areas as well. In terms of environment, I think, I'm thinking kind of what you're thinking, that if less people on the roads is a good thing for the environment. If people are traveling less, that's definitely a good thing for the environment, and maybe saving on other resources as well.
Great. We had several questions about the wealth tax, so that was very timely that Romain brought that up at that time. Since you talked about housing, I mean, there's a lot of talk about housing policy and the inequalities we've seen, inequities we've seen from restrictive housing policy and homelessness. Many argue for a revamping of zoning laws. Does anybody have any thoughts in that area?
Well, this is going to have to happen much more at the state and local level, or at the state level, than it is at the federal level. I mean, the federal government can do some things, and it can leverage the money that it sends out to the states to do something about this. But I think long-term, it is pretty clear from everything that I've read, and maybe this has been changed by the pandemic, that Los Angeles has to become a more vertical city. It can't remain a completely horizontal city. That doesn't mean it has to be all high rises. It can be mid rises, but it has to have some multifamily dwellings. The problem is, and I don't know how I got on the list, I'm on the list of the Sherman Oaks Homeowners Association. I live nowhere near Sherman Oaks, but their basic view is, even if you build a 4-story apartment on Ventura Boulevard, that is a violation of their rights to live in this kind of suburban enclave, because it could potentially cast a shadow on somebody's backyard two blocks away. So there's going to be a lot of resistance to changing some of these rules. But I think ultimately the economic pressures, and well, I shouldn't be talking about economics, I should be talking about politics. But I think ultimately some of the economic pressures are going to have to push people in the direction of not thinking of Los Angeles as if this were the 1950s and everybody can have their own tract home with their own swimming pool and their own small piece of land. It's going to be different than that.
Anyone else? Since we have students in our audience here, Bob, let me stay with you. What do you think the prospects are of more student debt relief? There was a big issue with students who, for relief for students who may have been defrauded by for-profit universities. But Biden has said in the past, he's looking at $10,000 maybe. Others in the Senate want as much as $50,000. There's still an issue about how much he can do by executive order. Do you have thoughts about where the administration's going there?
Biden has seemed pretty adamant that it should be $10,000. That doesn't mean that ultimately he wouldn't compromise, that it couldn't be 15 or 20. But I think that the view of a lot of people in the administration is that to forgive, for example, $50,000 in debt for everybody who has $50,000 in debt does the opposite of what we were talking about 5 minutes ago, which is trying to deal with wealth inequality. It rewards a lot of people who have gone to elite universities, have very good jobs, and are doing very well, and may have some substantial family money as well. But whatever the merits, I don't think that Biden will unilaterally decide that he's going to forgive $50,000 in student debt. I think there will be relief in terms of student debt. Number one, as you said, and already has happened, for those who were defrauded by for-profit universities. And I think more generally, up to $10,000, $15,000, $20,000, that could very easily happen.
Romain, Paulina, do you have any thoughts on student loan debt or housing, I guess? All right, I'm looking at my questions here. I think we've gotten to most of them. Romain flagged something earlier about the possibility of economic scarring from COVID-19 and whether there'd be effects on potential GDP, and whether the infrastructure bill potentially, or the bill that was just passed, would have effects to improve potential GDP. What do you think about the trends? I mean, productivity growth has been lower. Many people are still holding out a great hope for artificial intelligence or things like that. Don't really see it yet in the statistics, but what do you think?
So So I think the big productivity gain for automations, I think my view is that we haven't seen them yet. I'm not pessimistic. I'm not like some people that say they will have marginal effect. It has not been actually really so dramatically seen yet. So what I've been seen is for sure the consequence of globalizations, with two consequences. One consequence on the offshoring, and the other consequence on the price of consumption goods. So I think, in my view, the trend in lower consumption goods is something that actually might come to a stop. We're seeing the rise of trade costs. I think something we didn't discuss before, but one of the effects of COVID will be clearly to put a brake on the globalization forces. So one impact will be on the gains from trade, that's for sure, and that's affect a lot people in the low income. And that might also limit the potential for offshoring and then accelerate automation. So I'm really not an expert in the consequence of automation, so it will be preposterous for me to answer. But what I know is that if this happens, this will generate a further decline in the labor share. And if there's a further decline in labor share, this will translate to more inequality, and that make the policy to fight inequality even more important. I think there were one issue that was discussed before about what people have been called the essential workers, and so and the fair wages for the essential workers. So I think this in part will depend on the minimum wage increase. This also in part will depend on how we are able to solve the healthcare issues. How we are able to restructure the cost structure of healthcare so that essential work in the healthcare system can be paid more, especially at the bottom of the income scale. So I think that makes, in my view, the issue of the reform of healthcare even more important.
Paulina? Okay, looking at the questions here, several questions about the minimum wage. I think we've talked about the politics of that, unless someone has something else to say. Another question about Pete Buttigieg's appointment as the transportation secretary and what his priorities might be. I think the infrastructure bill. Okay, question about airlines and the COVID-19 relief. Are there other industries that need large-scale help?
Restaurants, and they got it in the $1.9 trillion bill. They campaigned for it very hard for a year, but restaurants and the arts have both been hit very, very hard. And I think that it's not just the checks that are going out to individuals, but the money that's being provided to businesses in order to keep them afloat until we get through to the end of this. Look, can I say something about the politics of all this?
Sure, please do.
Yeah. If we have the scenario I talked about at the beginning, which is COVID under control and the economy actually growing quite well going into the 2022 midterms, I don't actually understand the Republican position on this, because they have opposed a bill that has 65-70% support among the public. Are they really going, and let me talk about what Romain was just talking about, are they really going to go into the next campaign saying they want to do less on healthcare? They want to oppose the minimum wage. They don't want to make the child tax credits permanent. For me, that's a recipe for defeat, assuming that the conditions are right in terms of what the Biden administration has achieved. It's stunning to think that, the old line is the definition of insanity is you keep doing the same thing and it doesn't work. Well, in 2018, going after healthcare didn't work. And at this point, to not support the elements of that bill. You're even seeing in Wyoming suddenly, after the passage of the $1.9 trillion economic rescue package, a movement toward, in one of the reddest states in America, a movement toward expanding Medicaid. And I don't think that's just out of the goodness of people's hearts or because they think the numbers add up finally for them. I think it's because they're afraid of opposing it and what the impact will be politically among their own voters.
What are the prospects for anything happening, any kind of major reform of healthcare?
I think the possibility down the road of having a public option is real, but I think what Biden has done already has constituted the biggest expansion of Obamacare that you could get short of a public option. I mean, healthcare costs, health insurance costs have been cut tremendously. There's going to be a lot more investment in healthcare and healthcare research. There's, as I said a moment ago, I think we're pretty soon in almost every state, unless you are just plainly ideologically, implacably, and immovably antediluvian, you're going to see an expansion of Medicaid.
Yeah. I have another question here, unless anybody wants to weigh in on the healthcare or related issues. From one of our colleagues, I guess I won't name him here. Question for Bob. What is your base case for income tax rates as well as timing of income tax increases, expectations for state and local tax relief, SALT relief?
Biden has, I think they're talking about going back up to 39% as the top rate.
Yeah.
The economy functioned fine then, although I would defer to the other people on this panel, but the economy functioned fine then. There's going to be a fight over the estate tax, which I don't know is smart politics for Democrats. In fact, going back to what Ramon said, I think it would be smarter maybe to think about fighting for a wealth tax than that starts at $50 million in wealth than it is to try to repeal the estate tax or not repeal it, repeal the cuts in the estate tax and roll back the exempt levels. Because in the upper Midwest, in the political battleground states, and pardon me for being political, like Wisconsin and Michigan, places like that, there are a lot of farmers and a lot of small business people who, if you drastically cut the exemption in the estate tax, it may be fair on paper, but it's going to be very bad politically. So I think you got to look for other alternatives. Corporate taxes are going to go up. I think there's almost no question about that. And I think the top individual rate would go to 39%. I'm a skeptic that the administration will either try or succeed in taxing capital gains at the same rate as ordinary income, because the last thing they want to do as they head into 2022 is have some deleterious effects on the stock market.
That raises several questions, but to answer a student question first, there's a question about the size of the national debt and whether we should worry about it at all. Romain, do you want to take that?
Yes, so on the national debt, I think, I mean, we all know that that the US have this exorbitant privilege. So in a sense, we should not be too worried about the national debt. Even if the interest rates are going up, the debt burden will be significant. So I don't expect a debt crisis to take place in the US. Two things can happen. First, the debt burden can be quite significant if the interest rates are going up, especially if people are starting to factor in inflation expectations. The worst part is that if people expect inflation and then inflation does not take place, but because in this case the federal debt burden became higher, but then you don't benefit from the deflation to it. What's going to happen? But I also disagree for people believe that you can issue debt up to the sky. At some point, there need to be real goods in front of money. And the way it's going to happen is basically the US dollar will actually depreciate. I think now I have pretty clear ideas that it's already in the trend. the US dollar depreciation will actually what will balance the effect of higher debt in the US, almost for sure.
Yeah, there are more questions on that, but I think you answered all of those. There have been several questions in the thread about asset prices, stock prices, housing prices. So I'll stay with you, Romain. Are you any concerns about any potential disturbances in asset markets as a result of potential rapid increase in interest rates, if that, in the unlikely event that has to happen?
Yeah, so I think I would say even more than on asset prices, any type of investment returns that we have. Now we are with zero interest rate, we're in a very pathological situation in which there are almost no discipline. So with very low interest rate, with abundance of liquidity, there is basically no discipline in the debt market. So anyone that would like to get financing, whether its project is good and bad. So I think there will be asset prices correction because as interest goes up, the future dividends pricing are reduced. But more importantly, I think in my view, going back to positive interest rate will be very positive. It will bring back some discipline in the debt market as you shift from excess liquidity, underpricing of risk situation to more pricing of risk. Then of course there will be some correction. But the correction will be a good thing. Basically, it will be that a lot of companies that were able to get decent return by over leveraging will now basically be driven out. And I think that for me it's positive.
Bob, I think you look like you wanted to say something there.
No, listen, I since I've been involved in politics all my life, I don't have to be an expert on something to have an opinion on it. But on the other hand, when I am with experts, unless I profoundly disagree, I'm going to be quiet. The one thing I think we have to be, the assumption of a lot of these questions is that interest rates are going to go up in the near to medium term. And you see that the stock market reacting to that possibility, despite what Powell has said. I think that's very unlikely. I have been reading this. I'm not an economist, but I have been reading this since, I don't know, 2012, that, somehow or other interest rates were going to go up and up and up because the government was spending too much money. I think in the long term, that's a concern. In the short and medium term, I don't think that's a concern. And I don't think the administration does either.
Actually, I believe the interest burden of the debt has fallen even as the debt has arisen.
Right.
I realize we're getting close to 6:30. I'm waiting for some guidance from my students about whether we have to wrap up. I guess I will close with, I polled my intermediate macroeconomic students about the inflation, their inflation expectations, and they believe it's going to be temporary. They're all in on anchored expectations. As Olivier wrote in his recent textbook, which we're looking at. Olivier was also my dissertation advisor, by the way, full disclosure. It's why I was interested in the argument earlier, because they're basically among economists who are all trained in exactly the same way by very similar people. But there you go. I think we're at 6:30. I want to thank all our panelists. It was a really interesting discussion. We could talk for a long time. We've only really scratched the surface of the things we could be talking about. Thanks to all who have joined us and written in with questions. I hope you enjoyed it. And thanks also to the Economics Association, Uma and Alex and the board, and also the Center for the, let me get the term right, the Center for the Political Future at USC for helping us with this event. Thanks everyone. I hope, Uma, I guess, is going to make some final remarks. Thank you all.
Thank you, Professor Moore, and thank you all for coming out tonight. If you're interested in attending more Economics Association and Center for the Political Future events, I'm going to drop the links to both of our websites in the chat. And then thank you again to all of the panelists and to you, Professor Moore. Have a nice evening.